Depending on when you are listening to this episode, we are less than 5 days away from a sea change in the political and regulatory environment for Bitcoiners and Bitcoin-related businesses in the United States. So many times you hear the quote-unquote experts say, the efficient market hypothesis says this is already priced in. Plebs, I am telling you, they are wrong. Buckle up because things are going to get wild. This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Guten Tag. Buenos dias, Morgen, and welcome to episode 198 of the Bitcoin Bulletin Podcast. It is another exciting day here on Florida's Space Coast. Obviously, we have a lot of exciting Bitcoin news to talk about, but after I wrap, I will be heading out to, I'm only going to be heading out to the beach because that happens to be the best view. Tonight is the next attempt at the inaugural launch of Blue Origin's new rocket, the New Glenn, and they built a brand new launch pad. Actually, they refurbished an old launch pad, but it's functionally brand new. And it happens to be the launch pad that's situated absolutely the best from watching launches. I mean, it is just straight out across the ocean from the beach in Cocoa Beach to the tip of the Cape, out by the lighthouse from Cape Canaveral. And that is where the New Glenn launch pad is. So it's exciting. A new rocket is entering the commercial space race. I like to joke that this is the Amazon rocket attempting to usurp the PayPal rocket, but I digress. I know a lot of Bitcoiners have been fretting the sideways action, the sideways price action, or even the downward price action up until just hours ago. And I even heard one extremely well-known Bitcoiner call for a retrace of the price to as low as $60,000 per Bitcoin in the coming weeks. I'm telling you, well, first of all, nobody has a crystal ball, but I have laid out the reasons over and over again why I believe we are still early, not only early to Bitcoin, but early to this cycle, why this cycle has reminded me more of the 2016 halving cycle than the others, and even why 2020 geopolitically has reminded me a lot of 1980, with Ronald Reagan defeating Jimmy Carter, for example, instead of Donald Trump replacing Joe Biden. But that was a topic I've covered in depth in previous episodes, including the last. Either way, all of these signs point to what we referred to in 1980 as morning in America, but which could easily call for the dawn of a bright new day for Bitcoiners all around the world. If you remember the 2016 halving cycle, at this point in the cycle, which was then it was January of 2017. So 4 years ago today, on January 15th, 2017, Bitcoin was less than $1,000. In fact, it was approximately $818 per Bitcoin on the 15th of January, 2017. However, by the end of 2017, Bitcoin went on to rip all the way up to right about $20,000, depending on where you get your price data, but approximately $20,000. And that was more than a 20x increase in the span of basically less than a year. And most of that run happened in the late summer and fall of 2017. For example, Bitcoin broke the $4,000 mark for the first time ever around August of 2017, and it still went on to 5x from there before it was all over. And remember, I've said in the past that there were a lot of reasons why I believe the 2020 cycle was suppressed, why we didn't achieve the Bitcoin price action that I believe we normally would have in a neutral environment. Remember, we had the China miner ban where more than 30% of the network hash rate had to turn off and they had to relocate to another country. And then, of course, we had the Celsius and the Terra Luna collapse and the FTX scam, just absolutely putting a nail in the end of that bull run. So this time around, instead of black swans, we are potentially looking at golden swans. If my feelings are correct, buckle up, because imagine 20x from here, and that's basically $2 million Bitcoin. And I don't know too many people who are calling for $2 million plus Bitcoin in their wildest estimates. It seems like 1 million Bitcoin is viewed at as farcical almost by most people. Even just 5x from here, which in 2017 we did in just the span between August and December, even 5x from here would be about $500,000 Bitcoin. Closing in on the market cap of gold, still a little way to go, but pretty close to closing in on that market cap of gold, which, as you know, is a huge both monetary and psychological price point for Bitcoin, especially if the use case for Bitcoin is going to be digital gold, for example. Well, replacing gold in that role, Bitcoin has to get to the market cap of gold first before that can happen, or at least on the path of it happening. So, if we perform even half as well as the 2017 bull run, the 2016 halving cycle, the bull run really kicked off in the latter half of 2017, then Bitcoin is up for a really, really impressive show of force later in 2025. We do have some interesting news to talk about as well. And of course, we have a very important question to consider. But before we get into all of that, let's take our customary look at Bitcoin's vital statistics. At the time of this recording, Bitcoin is sitting at a block height of 879,440, and Bitcoin is ringing in just a whisker under that $100,000 US dollar mark at 99,920. And Bitcoin was actually above 100,000 while I was preparing the show notes right before I went into the studio to hit record. It's pretty amazing, actually, considering less than 24 hours ago, Bitcoin was in the lower 90s, and Bitcoin had even retraced to as low as 89,000 US dollars just briefly in the last couple of days. But either way, at Bitcoin's current US dollar value, that means we're pretty close to that 1,000 sat per dollar mark. Currently at 99,920 US dollars, you will receive 1,001 Satoshi for every US dollar that we convert into Bitcoin. So that is a pretty big psychological level for me as we plummet below 1,000 sats per dollar. We've only done that twice. We've only purchased for less than 1,000 sats per dollar twice in the history of this podcast. Of course, in the early days, we purchased for substantially more. But that's the nature of the beast. As the price of Bitcoin goes up in US dollar terms, as the US dollar trends to zero in Bitcoin terms, you're going to get less and less of it for every fiat dollar that you exchange. So hence the reason for the saying, you get Bitcoin at the price you deserve. Bitcoin's current price gives it a market capitalization of 1.98 trillion US dollars, just a whisker under that magic $2 trillion market cap, which we've only seen Bitcoin cross once in the history of this podcast. It was above 2 trillion for more than just one day. But one of the neat things about doing a weekly podcast, about doing a weekly DCA series, is it forces you to zoom out. Instead of staring at the price of Bitcoin on a daily, hourly, or minutely, or just constantly having that ticker run in the background, we get to put it into a 7-day or a 1-week perspective. And it forces us to zoom out, because they say zoom out, often when people are getting obsessed about this metric or that metric, but particularly the price of Bitcoin in fiat terms. And so when you zoom out onto a Bitcoin Bulletin Podcast weekly episode basis, this is the second highest market cap we have seen at the time of a podcast, 1.98 trillion US dollars. Speaking of normies and normie financial metrics, for those of you who value your wealth in shiny yellow rocks, it will currently cost you 37.2 ounces of gold to purchase just one Bitcoin. Again, as Bitcoin demonetizes gold, as Bitcoin replaces gold as the best store of value that mankind has ever discovered. And that is more than 1 full ounce extra of gold, 1 full 1 ounce gold coin extra, 1 Spanish doubloon, 1 shiny yellow Peter Schiffbuck to purchase just one Bitcoin above where we were last DCA Wednesday. So again, as they say, you get Bitcoin at the price you deserve. And for you gold bugs who have still not gotten off zero, the current price that will cost you to convert some of your gold treasury into Bitcoin is 37.2 ounces of gold per Bitcoin. For those of you who are a little more practical and value your wealth in things that will help support you and your family, 1 Bitcoin will currently purchase you 5,588 large pepperoni pizzas from Papa John's. That is one pizza every day for more than 15 years for just one Bitcoin. Plebs, that's almost 4 complete halving cycles from now. I've mentioned this multiple times, probably ad nauseum, that I think we've basically reached the point where if you had one Bitcoin, if you were a whole coiner and you decided you were going to try and spend that Bitcoin by ordering one large pepperoni pizza a day, every day until that Bitcoin was gone, you'd never be able to spend your Bitcoin, because we're at the point now where if the Bitcoin price remained exactly the same, it would be 15 years before you ran out of Bitcoin. But of course, the price of Bitcoin doesn't remain the same. Zooming out, Bitcoin consistently goes up and to the right. And it does so usually around the bull run that comes after the Bitcoin's monetary reward, its minor halving, which of course happened last spring, almost a year ago, coming up on a year ago here in just a few short months. Either way, after that happens, it kicks off the halving cycle bull run, usually a year to 18 months after the halving date. So we're just really getting ready to rock and roll on that. And that's when we've seen most of Bitcoin's gains. And even though it tends to have a Bitcoin winter, a Bitcoin bear market after that, 2 years after the halving that lasts a year or so, it still is like a staircase slowly going up and to the right. And even though we might have a big 60, 70, 80% pullback, it still doesn't eat up all the gains that the bull run made. So the next halving cycle goes even higher than the one prior to that. And that's going to happen 4 more times over the next 16 years. Basically 15 and a half years from now puts us after the 2040 halving. And who knows what the price of Bitcoin is going to be then. We often think of Bitcoin in terms of 4-year cycle prices, or they say that, if you were going to get into Bitcoin and you're going to hold it for your family's treasury reserve asset, if it's going to be your savings, if it's, you hope for it to be generational wealth one day that you can pass on to your kids, that you really need to plan on holding that Bitcoin for at least 10 years. We're talking 15 and a half years almost now. So I don't think you'd ever be able to spend your Bitcoin, not even close, because, let's say Bitcoin goes up to 500,000 or a million, 20x, all of a sudden you would have a 20x number of pizzas for the same amount of Bitcoin. And that's going to happen 4 more times potentially over those 15 and a half years. Once again, I'm getting off on a tangent, but at least this is a Bitcoin related tangent. All right, that metric that has been my favorite for most of this podcast history, Bitcoin's 24-hour average on-chain transaction rate, is humming right along, averaging 4.17 transactions per second. That's up just a bit from last week, and as has corresponded in the history of this podcast, every time we've looked at this metric and it's been up over the previous week, the Bitcoin price has been up over the previous week. In fact, prior to Taproot and the ordinals and inscriptions and all the spam on-chain, anytime we saw Bitcoin processing more than, say, 3.14, 3.15 transactions per second, usually the price was pumping. That metric got distorted a little bit by all the spam transactions that are non-monetary transactions, JPEGs and the such being stored on chain. Although we've seen a lot of that taper off. So hopefully that was just a fad, but everything in life seems to run in cycles. And so I wouldn't hold my breath as far as that being over. But nonetheless, 4.17 transactions per second is would be considered healthy on-chain activity just 4 years ago, before we had all the Taproot-enabled shenanigans. Speaking of on-chain activity, the mempools are continuing to clear out. There's still quite a few transactions in the various mempools, but depending where you look, Clark Moody's dashboard, their mempool is down almost 30,000 transactions from last week. Last week, there were more than 133,000 transactions pending in their mempool, and currently, there are only 104,930 transactions pending. Mempool.space runs a slightly larger mempool. Clark Moody, I believe, has the default mempool size, so it won't necessarily include every transaction when there are more transactions than space dedicated for the mempool. But nonetheless, mempool.space is still showing more than a 50,000 transaction decrease in their mempool, down from over 176,000 transactions last Wednesday to just 121,220 transactions at the moment. So maybe for now at least, the ordinals and inscription shenanigans is faded and will be out of our hair for at least this bull run. That would be really nice, because that was adding to fee pressure, causing those fees to go up for your on-chain transactions. And speaking of 2017, how this reminds me of the 2016-2017 cycle, at the peak of the of the 2016 halving cycle in November and December of 2017, there were times when I tried to make on-chain transactions and it would have cost more than the equivalent of $50 to do so because fees were just through the roof. And that is with Bitcoin worth only a fifth, only 20% of its current value. So we would be talking $250 fees, in today's terms, if that were to happen again. Of course, there have been other improvements to alleviate fee pressure as well, SegWit most notably, but it's nice to see that fees are down, and hopefully they stay down during this bull run. Speaking of those fees, if you do need to send an on-chain transaction and you want to guarantee that it's mined in the next block or two, well, again, I'm getting my data from two different sources. Clark Moody's fee estimator is saying that you will need a fee of 7 sats per VByte to guarantee your mine in the next block. However, for the first time in as far back as I can scroll, they're saying that a fee of just 1 sat per VByte will be mined within a day. And of course, that's their lowest fee estimate. Mempool.space is telling a slightly different story. They're saying that regardless of the priority of your transaction, a fee of just 2 sats per VByte will be mined, whether it's a high priority transaction you want to see mined in the very next block or a complete no priority transaction where you're just maybe consolidating some UTXOs. Just 2 sats per VByte should get the job done. Looking back at the Block Explorer, I saw several blocks in a row today that were coming in the 1 sat per VByte. 1 sat per VByte fee range, except for when we had there were a couple blocks that took like 45 minutes or so between blocks, and fees spiked accordingly. But then as soon as blocks started coming in a little closer to that 10-minute average, the fees dropped back down. So at the current US dollar value, 2 sats per VByte works out to about 28 cents. And that is about as cheap as you could expect. That's practically free when you're talking that you can, when you're talking about, moving huge amounts of money potentially anywhere in the world where no one can stop you. No one can prevent you from sending the transaction. No one can reverse the transaction, completely permissionless and instant, basically, when you're talking like even international wire transfers take days, weeks to settle, that Bitcoin will have transaction finality within a matter of a couple blocks. So hypothetically, less than an hour, depending on how fast blocks are coming in. All for 28 cents US dollar terms is pretty darn amazing. All right. We had a difficulty adjustment in the difficulty it takes to mine the next Bitcoin block since the last DCA Wednesday. In fact, it was just 464 blocks ago. It was a modest increase. It got 0.6% harder to mine. And that's a little bit lower than last DCA Wednesday. The forecasts were calling between 0.89 and 0.9%. So it wasn't quite as big of a difficulty increase as it was looking. Of course, Bitcoin, the Bitcoin protocol takes a look at an average of the last 2016 blocks to determine what the difficulty in the next 2016 block should be. So when you're not really close to all 2016 blocks, because mining Bitcoin is basically random chance, kind of like stumbling upon the winning Powerball ticket, that you really don't know what that difficulty is going to be. We do know one thing though, that Bitcoin's hash power, the computing power securing the network, just like Bitcoin's price, has been steadily going up and to the right for the entire history of Bitcoin's existence. All 16 years since the Genesis was blocked, block was mined just a little over 16 years ago. And of course, there are times when hash power has gone down. Like earlier in this podcast, we mentioned when China banned mining and 30% of the hash power dropped off temporarily. But again, this is one of those zoom out things. And if you zoom out, hash power has been going up and to the right. So currently we're 1,552 blocks away from the next mining difficulty adjustment. Looks like that's going to be a little more than 10 days from now, about 10 and a half days, on sometime around January 26th. And the fee estimators are telling us that it's going to be, well, anywhere between no increase at all and maybe as much as a 0.5% difficulty increase. Again, it's too early to tell. The estimate of hash power is still going up, so it would make sense that we would have a difficulty increase. Again, this really only matters if you're a miner and you're talking about your miner profitability, because the difference between your block coming in 10 minutes or 10 minutes and 5 seconds or 9 minutes and 50 seconds is really insignificant when you're making transactions, because you don't know when that next block is going to come in. It might come in less than a minute, might come in the very second that you hit send on that transaction, or it might take an hour. That's just the nature of the beast. But if you're a miner, it got about 0.6% less profitable to mine Bitcoin, or at least 0.6% more difficult to mine Bitcoin. Profitability also factors in the cost of Bitcoin in US dollar terms, the value in fiat terms of Bitcoin, because obviously, even if it gets 10% more difficult to mine Bitcoin, but the price of Bitcoin doubles, then your profitability goes up. Again, only really important if you're a miner, but it is fun to look at because it shows the genius of Satoshi Nakamoto and the genius of the Bitcoin protocol in every little way you could think of. I mean, he literally took so many different things into account that the average pleb doesn't even really need to pay attention to, just to know that Bitcoin works. The reason why we aren't really looking at a difficulty increase is because at this moment, in just those first 460 some blocks, the blocks have come in at an average of exactly 10 minutes between blocks. So that's what Bitcoin shoots for. If Bitcoin's coming in, if a new block is coming in on average once every 10 minutes, then of course the difficulty is perfect and it won't need to adjust either way. If they're coming in too fast, which happens when more hash rate gets added to the network, more computers are trying to solve for the next block, then it gets more difficult. And if the blocks slow down, like happened when China banned mining and 30% of the hash rate went down, then Bitcoin makes it easier to find the next block for the next epoch until those blocks are averaging 10 minutes in between blocks. And speaking of that hash power, it is currently estimated that there are 758.9 exahash of computing power securing the network. That's up more than 10 exahash since last DCA Wednesday. So, again, if you zoom out, difficulty and of course, network hash rate are trending up and to the right, just like the price of Bitcoin. So I would expect if that continues, that we will see another difficulty increase in about a little less than 2 weeks, a little more than 10 days from today. Real quick, I want to take a minute to thank those of you listening to us on your favorite Podcasting 2.0 apps, such as Fountain. Podcasting 2.0 allows you to contribute back to this podcast through the value for value method by either streaming sats on a minute-by-minute basis as you listen, or by sending a boost, which is a shout-out via a Lightning transaction, where you can let us know what you think about this podcast, let us know what's going on in your community, or even just say hello. But because it is a Lightning transaction, you are sending value back in the form of Satoshis. Again, on the minute-by-minute, the streaming basis, you determine what value you think you're receiving from this podcast. If you think it's worth 1 Satoshi per minute of your time, set it at 1 Satoshi and stream as you go. Most people tend to prefer the boost method, and I like the boost method too because it's a little less anonymous. Obviously you're sending it from a NIM through whatever account you're listening, whatever app you're listening to, but it's a message. It's more personal. It's more unique, and it's always fun to read those on the forthcoming episode of the Bitcoin Bulletin Podcast. We do not have any boosts, any shout outs to read this week, but thank you to those of you who are listening. And the other reason you should be listening on Fountain is not only because you can help contribute value back to this podcast, but you can actually earn Satoshis just by listening to your favorite podcasts. I earned 50 sats. 50, it doesn't seem like a lot, but I earned 50 Satoshis for listening to a podcast last night. I earned 100 Satoshis a couple of nights before that. And while that might seem like nothing, because 50 sats works out to about 5 cents at 100,000 US dollars per Bitcoin, but it reminds me of the old days when there were Bitcoin faucets. So we've got fountain and faucet, two very similar sounding words, two very similar sounding meanings. And I think that's probably on purpose because back in the day, there were these faucets where you could earn 5 or 10 Bitcoin just for clicking on a link, just for going to a website when people were basically trying to give Bitcoin away to spread it around. And at the time, 5 Bitcoin was basically worthless. It was worth pennies, just like 50 Satoshis is almost worthless today, only pennies. But looking back on it, could you imagine getting 5 Bitcoin just for clicking on a website? You're going to feel the same way about 100 Satoshis or 50 Satoshis one day, because one day when we achieve hyper Bitcoinization, if we're talking dollar sat parity, maybe it's not the equivalent of 5 Bitcoin, enough to be worth $500,000, $500,000, but $5 for listening to a podcast is pretty significant. More importantly, though, if you want to build up your wallet on your Fountain app, then the amount of Satoshis on your Fountain app to help support your favorite podcasts, you can do so for free. It won't actually cost you anything to send those Satoshis, to pass those Satoshis along as value for value. So thank you to everyone listening, regardless of where you're listening from and regardless on what platform you are listening. And speaking of you, the listener, our geographic distribution of listeners has remained exactly the same once again. Kind of tends to ossify from time to time, and it seems like it's ossified for the last several months. The top 10 countries where our listeners are located at remain the same, with number one being the United States. So hello and thank you to all my fellow Americans listening here in the United States, where we're just 5 days away from a new president, a new administration, a new executive branch of the U.S. government, and that is going to make so much difference. Even if you don't like Donald Trump, even if you don't think he's going to accomplish half the things he's promised, just having an administration that isn't hostile to Bitcoin is going to be refreshing. Number 2 remains Singapore. So hello and thank you to all of you listening in Singapore. Apa kabar? Number 3 remains Germany. So I was going to say hola, Dankeschön, but guten Abend, Dankeschön, mein friends in Deutschland. Number 4 remains Argentina. So hola, muchas gracias, amigos in Argentina. Number 5 remains Luxembourg. So guten Abend, Dankeschön, mein friends in Luxembourg, or Morgen to those of you speaking Luxembourgish. Number 6 remains Canada, where hopefully it's a little warmer than it was last week with those wave after wave of winter storms marching across the continent. But thank you to those of you listening in Canada. Number 7 remains our cousins across the pond in the United Kingdom. So, wow, there's a lot of goofy things happening all over the world, but the United Kingdom is definitely no exception. So we feel your pain to our brothers and sisters over in the UK, but thank you for tuning in. Number 8 remains Spain. So hola, muchas gracias, amigos in Spain. Number 9 remains Australia. So hello and thank you to those of you living down under in Australia. Number 10, rounding out the top 10, remains Mexico. So hola, muchas gracias, amigos in Mexico. Again, thank you to each and every one of you, regardless of where you're listening. If your country is not in the top 10, we do have listeners all over the world, and I can scroll through the data, and there's a couple countries that are kind of tied in the 11th and 12th place, where it probably wouldn't take more than 1 or 2 additional listeners to bump your country into the top 10. We certainly saw that with Singapore launching into the top 10 all the way up to number 2 in short order. So again, thank you to everyone listening. It's super humbling, super flattering that we have listeners all around the world. All right, on to the news. As I've said repeatedly, we are now 5 days away, less than 5 days away from the beginning of the Trump administration, 5 days away allegedly from a slew of executive orders pertaining to Bitcoin and Bitcoiners, with multiple sources reporting that Donald Trump is going to sign up to 100 executive orders on his very first day in office, some of which applying to Bitcoin. Forbes ran the headline this afternoon: Bitcoin price surges after leak reveals imminent Trump game changer. 100 trillion predicted. 100 trillion would be, 50x the market cap right now, 50x. The US dollar value would just be nuts. But, all of these really high prices, all of these highfalutin forecasts and predictions, they seem crazy right now, but so did 20,000 seemed crazy in 2015. 69,000 seemed crazy, in 2020 at the halving date. It seemed like pie in the sky. Maybe there were those of us that were maybe listening to predictions by people like Plan B, et cetera, who are forecasting $150,000. But either way, lots of people were calling that pie in the sky. So every prediction will eventually come true. Every pie in the sky, lofty number, every huge price prediction for Bitcoin will eventually come true if Bitcoin fulfills even a fraction of its potential as a global reserve currency. Quentin tweeted on Twitter, I believe this was yesterday, breaking: Trump to repeal SAB 121 on day one. This executive order will allow banks to custody Bitcoin, unlocking massive adoption. Congress passed it last year, but Biden vetoed it. Trump's made it clear this is priority number one. This completes Saylor's $5 million Bitcoin trifecta. What he's referring to is SAB 121, which basically hamstrings banks, makes it impossible for them to do business in Bitcoin, because if they do, they have to take your Bitcoin that's held in your account and count it as a liability against their assets. That's a big deal for banks. That's why they're not doing it. SAB 121 is something that Trump can overturn with the stroke of a pen. Congress did pass a bill to try and overturn it, did in fact pass that bill to overturn it, but they didn't have a strong enough majority to override Biden's veto. So it has remained the law of the land. And apparently that is coming to an end in just 5 days. Beyond all of the things that we're talking about that Trump can do, like his promising the strategic Bitcoin reserve or repealing SAB 121, even if nothing pro-Bitcoin is signed into law, we can be fairly confident that if nothing else, Operation Choke Point 2.0 ends in less than 5 days. And plebs, this is not priced in. Remember all of those banks that wanted to offer Bitcoin services? Remember back in the day, if you've been around long enough, remember when Backed was the big thing? Backed was going to be huge. Bitcoin was going to drive rewards at Starbucks. It was going to drive your airline miles. Bitcoin was going to be used across the financial system, and Backed was the way it was going to happen. It didn't. And the reason it didn't happen were things like SAB 121 and Operation Choke Point 2.0. Remember all those projects? They just kind of disappeared. They got put on ice, like Caitlin Long's fully reserved Custodia Bank. I mean, she still has her bank, but she can't get a charter with the Federal Reserve. So functionally, she can't operate as a bank in the way that she needs to, in the way that she wants to. Well, again, you can thank Operation Choke Point 2.0 and the pressure brought behind the scenes by the likes of Elizabeth Warren, et cetera, for that. All of that comes to a dramatic halt in less than 5 days on January 20th, when Donald Trump is inaugurated the next president of the United States. So he doesn't actually have to do anything pro Bitcoin. He doesn't have to push any new laws. He doesn't have to actually do that Bitcoin strategic reserve. All he has to do is get out of the way and let Bitcoiners do their thing. Let Bitcoin developers do their developing. Let the banks that want to be involved in Bitcoin, let the brokerages that want to be involved in Bitcoin, let the companies like Back that want to drive your Starbucks rewards and your airline miles with Bitcoin, just get out of the way and let them do their thing. And that is going to be huge. It is going to be absolutely unprecedented. And regardless of what they say when they try and quote the efficient market hypothesis, saying that everything's priced in, just like the ETFs were not priced in, even though they said they were, when we saw the ETFs finally approved, Bitcoin set a new all-time high prior to the halving, something it had never done before. Clearly, that wasn't priced in. And it isn't just the federal government that's clearing the path for Bitcoiners and Bitcoin development. States continue to FOMO in. Just today, Texas Senator and physician Dr. Charles Schwertner tweeted, in fact, just a few hours ago, it is time for Texas to lead the way in establishing a strategic Bitcoin reserve. That is why I filed SB 778, which, if passed and signed into law, would make Texas the first state in the nation to establish a strategic Bitcoin reserve. I can't tell you that, every cycle we see FOMO. We saw institutional FOMO for most of the history. I'm sorry, retail FOMO was what drove most of the prior bull runs. Then we started to see institutional FOMO in the last cycle. And now we're talking about state FOMO, nation state FOMO, and corporate FOMO. Remember, this is the cycle that vindicates Michael Saylor and MicroStrategy. This is the cycle that vindicates Nayib Bukele in El Salvador. This is the cycle where other companies, other countries, states are going to be watching. And if you think institutional, if you think investor FOMO, if you think normie FOMO is bad, when people were aping into GameStop or when people were aping into Bitcoin at the peak of the euphoria phase in 2017, for example, you ain't seen nothing yet, because the kind of money we're talking when we're talking countries, states, pension funds, major institutions, it's just going to be off the charts. And if that comes to pass, repeating 2017 and even blowing 2017 out of the water is nothing. Hold on to your hats. Of course, the other thing that is really important to Bitcoiners besides Bitcoin-friendly legislation is Donald Trump's promise to commute the sentence of Ross Ulbricht on day one. And I keep seeing everybody count down on Bitcoin Twitter or X, 5 days till Ross is free, 10 days till Ross is free. The last one I saw was on Monday, and it said, Monday, this is the last Monday that Ross Ulbricht will spend in prison. And that one's wrong for two reasons. Inauguration Day is Monday, so he's going to spend next Monday in prison, bare minimum as well, or at least part of it. Again, I've spoken about this in length on other episodes of the Bitcoin Bulletin Podcast. We've seen this administration extend the middle finger at Bitcoiners and at those who supported Donald Trump all week. I mean, ever since the election. It's every day. It's one more thing he's doing to make Donald Trump's life more difficult. One more FU to those of us that supported Donald Trump. And he sees Bitcoiners in general as supporters of Donald Trump, even if you didn't vote for him, because by and large, the industry did. So one of the things I think he's going to do, and the deep state has a way of doing this, when a governor pardons somebody on the state level or a president pardons somebody on the federal level, Those pardons, they go to the Department of Justice, and then in this case, they'll go to the Bureau of Prisons, and then they need to process it, and they need to order the release, and then they need to process the release and sign their dot their I's, cross their T's kind of thing. And I fully expect them to slow walk this to the maximum extent they're allowed to under law. And I believe that's days, plebs. So the idea being that Ross won't walk free on day one, and they'll be able to say, see, Trump is a liar. And people will think Trump is a liar because they won't look any further past it, saying, look, Trump signed the release. It's not his fault that there's, still people from the Biden administration running the Bureau of Prisons, running the Department of Justice until he has time to get his appointees in there. And that's going to take a while. So while I'm optimistic that he is going to commute Ross Ulbricht's sentence on day one as promised, and if he doesn't, plebs, of course, we need to hold his feet to the fire on that. But I believe he will. He has no reason not to. It won't cost him any political capital. When he promised to do it, he got elected with that being one of his promises. So there's no reason for him not to, but there's all the reason in the world for the outgoing administration to extend their middle finger at us one last time and slow walk Ross Ulbricht's release. So I'm sure as far as he's concerned, getting out 4 or 5 days after Inauguration Day is still way better than spending the rest of his life behind bars. So it is exciting. And it's good to see that will happen, but prepare for them to slow walk that. On the flip side of all this positive news, there are those tamping down the expectations of the Trump inauguration pump. Jack Mallers, the founder of Strike, the founder of Zap before that, is one of those people. And he said that basically the long and the short of it is Bitcoin always does the exact opposite of what everyone is expecting. And since everyone is expecting a huge pump, we'll probably get the opposite on Inauguration Day. Of course, people said the same thing about ETFs. Remember, ETFs were priced in. The price had already pumped in expectation. And so after the ETFs were approved, the price was supposed to crash. That didn't really happen. He went on to double down, saying that because of the liquidity crisis that's pending, that we'll probably see Bitcoin fall as low as 60,000 US dollars or so as a result. This is a quick reminder to be humble. Hyper Bitcoinization is not going to happen by Friday at 5 p.m. And I mentioned already, the current administration is not going to go quietly. And I say on every episode, nobody has a crystal ball. I don't make specific price predictions because I think nobody can. Even though when you zoom out, Bitcoin's going up and to the right, what it does on a day-to-day basis is volatile as hell. It's all over the place. Bitcoin could very well crash down to 60,000 US dollars and still hit $1 million or more this cycle. That would not be unusual for Bitcoin. But again, nobody knows. I am just optimistic enough that there is enough positivity coming down the road that we're going to be unleashing so much creativity that's already been thought of, projects that are already on the books, engineers have already been hired for. The only reason they haven't happened already is because of Operation Choke Point 2.0, et cetera, because of the SEC, et cetera. And all of that goes away on January 20th or shortly thereafter. And I think that's just like taking the cork out of the champagne bottle after you shake it. Even with Bitcoin tending to do max pain, tending to do the opposite of what you expect, there's just a lot of rocket fuel getting ready to pour it on this one. All right. Speaking of the current administration and one last FU, not going away quietly, no BS Bitcoin is running the headline today. BitMEX slapped with additional $100 million fine over Bank Secrecy Act violations. BitMEX has been issued an additional $100 million fine for violation of the Bank Secrecy Act that occurred between 2015 and 2020. So these morons are only in power through the end of this week. On Monday morning, they're all freaking unemployed, and they're still conducting their war on Bitcoin and cryptocurrency, as is evidenced by this headline. However, in a case of even a broken clock is right twice a day, there have been, as of yet unconfirmed reports that the Biden administration is attempting to dump every last Bitcoin the government holds as one last FU to Trump and one last FU to Bitcoiners who voted for him. Well, one of the ways they're apparently trying to get rid of all the Bitcoin the U.S. government holds, at least in one particular case, it happens to be the right thing. CoinDesk ran the headline just 8 hours ago. U.S. prosecutors ask court to green light return of 95,000 stolen Bitcoin to Bitfinex. If you remember the Bitfinex saga, Ilya Lichtenstein and his wife Heather Razzle-Khan Morgan, the world's worst rapper, they were convicted of stealing almost 120,000 Bitcoin from Bitfinex in a hack in 2016. Obviously, they stole those Bitcoin from Bitfinex customers because they belong to Bitfinex customers. And the fact that originally the government wasn't going to return those Bitcoin. To me, that was a lot like if your car was stolen while you were out at dinner and the police immediately chased down and captured the thieves. But since your car was really nice, let's say you had a Lambo, they decided we like this car and we're going to keep it for ourselves. Well, that's BS. It's my car, right? Just because it got stolen doesn't mean it's not my property. And in this case, it was BS for the government to hold those 120,000 Bitcoin, of which apparently they have 95,000 still, because that's not the U.S. government's Bitcoin. That's maybe it was evidence during the trial, but really it's stolen property and needs to be returned to the rightful owners. So in this case, I think Biden is doing this as an FU to try and make it harder or impossible to Trump to get the strategic Bitcoin reserve that he promised when he said on day one, he would sign an order that the U.S. government holds their Bitcoin, that they don't sell it. And so in addition to trying to sell the Bitcoin that was moved to Coinbase, allegedly, no one knows for sure if that happened. And because it happens off chain, it's Bitcoin that's held in Coinbase custody. It's hard to know if it has already happened or not. But in this case, the Bitcoin that was stolen from Bitfinex, he's returning it so Trump can't use it for the strategic Bitcoin reserve. And he accidentally got something right, because that Bitcoin needs to go back to the Bitcoiners it was stolen from. One other topic that people have thought a lot about, especially when Bitcoin is pumping, is how much Bitcoin is enough. Do you have enough Bitcoin? Have you stacked hard enough? Well, a couple of cycles ago, the joke was, it was a parody. It was a meme, 6.15 Bitcoin for eternal riches and well-endowed women, as the meme went. But I have a slightly different theory on how to determine whether you have enough Bitcoin or not. And again, this is just kind of voodoo as well. This is, rolling the bones, trying to look into a crystal ball that I don't have, but at least doing so by looking back at what Bitcoin's done in the past. And for me, when you determine whether you have stacked enough Bitcoin, you need to look at it in terms of miner rewards, or forthcoming miner rewards anyway, because the current miner reward at 3.125 Bitcoin works out to about $312,000. And for the average person, stacking $312,000 during this during this miner epoch, during this halving cycle, that's probably pretty unrealistic for the average person. I'm not going to be able to stack $312,000 with the Bitcoin in the next 4 years. I don't know too many people who will be able to, but the previous miner reward up into the 2024 halving was 6.25 Bitcoin. And that's currently worth about $625,000. But at the time, it was worth substantially less than that. And the miner reward before that, up until the 2020 halving, was 12.5 Bitcoin, which now is worth a staggering $1.25 million US. But at the time wasn't a whole lot of money in the grand scheme of things. OGs like Adam Meister, for example, like to remind you that you should buy Bitcoin and put it away for at least 10 years. Adam Meister always says strong hands, long-term thinking, but the idea is that anyone who has held Bitcoin for 10 years has seen an unprecedented price appreciation in their stack. We all remember those headlines from previous cycles that read something along the lines of, if you had invested just $1,000 in Bitcoin 10 years ago, here's how much money you would have. Well, you don't even have to go back 10 years. Let's look back less than 5 years to the beginning of that previous halving cycle I was just alluding to. The Bitcoin price at the time of the 2020 halving, which occurred on May 11th, 2020, was about $8,800. At the time, the mining reward prior to the halving, at the halving, was 6.25 Bitcoin. And that was worth about $55,000 US at the time. Now, that's a lot of money, but it's not an unrealistic goal for a retirement goal. If you had an employer matched 401k, for example, and you were over a period of 4 years trying to sock away enough money to retire in 4 years, 10 years, whatever it may be, trying to sock away $55,000 is a lot of money, but it's not an unrealistic retirement goal over a five-year period. It works out to a little more than $10,000 a year. If you had done so, you would right now be well on your way to retirement levels of Bitcoin. And after another cycle or two, only imagine how quote unquote Bitcoin rich you would be. So now that miner reward, it's a big lift for most people. As I said, the current miner reward at 3.125 Bitcoin, working out to a little more than $300,000 US at the current price. But let's take this logic and say your goal is to acquire the next mining reward, the upcoming mining rewards, the 2028 mining reward after the 2028 halving. At that point in time, the reward gets cut in half again to 1.5625 Bitcoin. And you have a little over 3 years to get to that goal. But if that's even too big of a lift and you simply need to lower your time preference a little bit and adjust your timeline to the 2032 halving, when the halving reward is only going to be 0.78125 Bitcoin. Now, over the next 7 years, stacking the equivalent of $78,000 in Bitcoin towards your retirement might seem a little more feasible. You get the point. But the trend has been that once the miner reward is behind us a couple of cycles, that amount of Bitcoin is now life-changing money. So pick a miner reward in the future that seems feasible to you, whether that's 0.78 Bitcoin or whether it's going to be 0.35 Bitcoin if you push out one more halving. And if you have the time, if you can get to that miner reward by the time that miner reward happens and hold that Bitcoin 4 years later when the next miner reward rolls around and we are in that next mining halving bull run, you will now have money that is basically a life-changing amount of money. And if you hold on to it for several additional mining cycles and Bitcoin continues to do what it continues to do, then eventually you'll have that generational wealth, even by stacking what seems like an insignificant amount of Bitcoin at the time. 0.35 Bitcoin right now would still be 35,000 US dollars, but you got 9 years to stack that 35,000. We've stacked more than $3,000 just by doing it $20 a week. And so the point I'm trying to make is if you want to determine how much Bitcoin is quote unquote enough, look at what the miner halving reward was 4 years ago or 4 years before that. And when it gets to an amount that would be your enough amount, say, well, if I had 6.25 Bitcoin, or if I had 12.5 Bitcoin, that would be my enough. I need 12 Bitcoin. If I had 12 Bitcoin right now, I'd retire. I'd be on a private island somewhere or whatever. And then, you look and say, well, that was 8 years ago. And so look 8 years into the future, pick that miner reward, and then aim for that. And if you can surpass that, you'll know that when that becomes the previous miner reward or two previous miner rewards ago, that if history holds, you'll have enough. Above and beyond, though, what really is enough is that you've stacked what you could. That when Bitcoin goes to the moon, when we have hyper Bitcoinization, that you stacked as hard as you could, that you don't look at your savings account with 100,000 US dollars in it that you were afraid to pull the trigger on and go, I should have bought that whole Bitcoin when I had the chance. As long as you're not in that position, then the answer is you have enough. Again, remember, when we do have hyper Bitcoinization and they've got the entire global population fighting for Satoshis, nobody will be able to have more than 150 or 200,000 sats to their name on average, depending on how many Bitcoin have been lost by that point in time. And, and even Bitcoin that isn't lost, there's huge hodlers like the Satoshi Bitcoin that isn't realistically ever going to be sold. So it's going to be dramatically less than 150,000 Satoshis per person. So that's a you do you thing. Real quick before we wrap this up and do our DCA stack, I want to point out that, remember last week when we said, should you be orange pilling during a bull run? Well, I mentioned that if you wanted to orange pill, one of the successful ways I've orange pilled normies was to compare a normal day on the stock market to the worst case scenario if they were to get off zero and simply convert 1% of their investments to Bitcoin. So if you're doing so, if that's the strategy that you use, days like Friday were prime orange pilling opportunities. Because, for example, on Friday, if you were all in on indexes, if you had the Dow and the S&P, you lost more than 1% of your wealth. For example, the Dow went down 1.6%. So did the NASDAQ, and the S&P went down 1.5%. So if you were all in on the Dow, you lost 1.6% of your wealth. If you had converted 1% of your wealth to Bitcoin, to lose that kind of money, Bitcoin would have had to gone to zero. So days when the markets are down are days when I try and soft sell orange pill normies that I know have all their wealth in the stocks and bonds. And I think a day like Friday would have been a no-brainer. It's like, if you invest 1% of your wealth in Bitcoin and it goes to zero, you lost less money than you did today just by looking at your stock portfolio. Speaking of traditional markets, of course, the big traditional market news today was that CPI came in a little bit lower than expected, and headlines like Yahoo Finance's Wall Street rallies after cool CPI. U.S. stocks ripped higher on Wednesday as hopes for bank earnings paid off, and a crucial consumer inflation update showed key prices increased less than expected in December. And again, this is all just BS, because I remind you, it was Mark Twain who put it the best when he said there are three types of lies, damn lies, and statistics. And if you've been even a couple of inches down the Bitcoin rabbit hole, you know that inflation, that CPI is a completely made up metric, that they change what is calculated all the time. They take things out of their quote unquote basket of goods. Like, for example, if steak gets too expensive, they substitute ground beef. And then they do stupid things like the hedonic adjustment, where they say that the price of your computer has doubled over the year, but it got twice as fast, and therefore is actually deflationary, not inflationary. So it's mind-boggling, it's flabbergasting that we're at a point right now in the traditional financial markets when things go through the roof if there's an indication that the economy is tanking. Because that means the Fed is going to cut interest rates, and interest rates will get cheaper. There'll be free money, and zombie companies can continue to function. So everything gets more expensive. And in this case, it's that bogus CPI index. Whereas if you went to the grocery store this week, you know that inflation has not cooled, that it's still very expensive, that you're still spending more money than you ever have on your grocery bill. Gas is getting more expensive again because the current administration has drained the Strategic Petroleum Reserve. And after they were able to hold gas prices or lower them a tiny bit just by flooding the market with cheap oil, those days are over. That oil is gone. And so prices are ticking back up. And oil tends to drive the price of everything because everything needs to be manufactured. Almost everything synthetic is made with oil. And if it isn't, it's shipped with oil, whether it's shipped from China on freighters that burn oil or driven across the country in trucks that are burning diesel. I'm getting off on a tangent, but the big financial news for the normies today is about interest and CPI and its effect on interest rates, because just the other day, everyone was assuming that Jerome Powell was going to not cut interest rates anymore, as opposed to the 6 or 7 interest rate cuts he was forecasting in 2025 prior to Donald Trump being elected. And again, none of this should matter if you're a Bitcoiner. This is all just a distraction. All right. I have a bunch of notes that I took over the weekend that are now completely irrelevant. Like, for example, I had a whole bunch of notes about the economy and interest rates, CPI, et cetera, but that's all ancient history now. So I'm going to skip on past that, and I'm going to move on to our DCA segment. So on to what makes today and every Wednesday special, and that is that Wednesdays are DCA Wednesdays, or dollar cost averaging Wednesdays. And if you don't know what DCA or dollar cost averaging is, of course, DCA stands for dollar cost averaging, which is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, this is going to be our 182nd stack. We started stacking an equal portion, which I chose at just $20 US, and on a regular interval, which I chose weekly on Wednesdays, all the way back on July 28th, 2021. And in the 181 Wednesdays since then, we have converted a total of $3,620 US into a stack of 10,293,370 Satoshis. And we did so at an average purchase price of $35,168.27. We began this experiment between the double high of the 2017 bull run. If you remember, Bitcoin hit 66,000 US in the spring of 2021, then went kind of down for a bit, and then launched all the way to $69,000 in November of 2021. So we stacked all the way up to the previous cycle all-time high. Then we stacked all the way down, all the way through the bear market, all the way through the crab market. We stacked all the way back up to the new all-time high after the ETFs were approved, and every Wednesday in between. And the result being the average price we paid for the Bitcoin we do hold works out to $35,168.27, which is only about a third of what the stack is currently worth, with Bitcoin ringing in at about 100,000 US. That is not too shabby. We have already proven that had we YOLO'd in on that first DCA Wednesday, we would have fewer Satoshis than we do now, and at a more expensive cost basis. But most importantly, we showed that by stacking as little as $20 US a week, we were able to build a stack that is more than 10x, actually 100x, what the average pleb around the world will be able to hope to stack one day when we do have hyper Bitcoinization. So instead of scrounging to get 150 or 200,000 sats for your family, you would already have 10.2 million sats if you're following along and stacking just $20 US a week. Of course, this is another one of those you do you things. Obviously, Michael Saylor isn't going to stack just $20 a week. So if you're listening to the sound of my voice and $20 a week is peanuts, then you stack a number that you feel is fitting to your personal situation. If $20 a week is just too much, you don't have $20 ever sitting in a savings account or under the mattress somewhere, then pick an amount that you feel comfortable stacking. Because, for example, on Cash App and other apps like it, you can stack just $1 at a time. So we picked 20 because I think it's the number that the majority of the people listening to this podcast can relate to. And for those of you who are not in that position, again, adjust accordingly. But if you had stacked at least $20 a week during the history of this podcast, you would have more than 0.1 Bitcoin to your name now. And you would have done so for $3,620, which is pretty darn cool, not too shabby. To grow our stack, as usual, I'm going to use the Cash App. Again, Cash App is not a sponsor of the show, and they might not even be available where you're listening. So again, you do you. Pick an app, a service, an exchange, whatever that fits your needs, that's legal where you're at, that is preferably reputable. Don't pick the first random site you see somebody post about on Reddit or Twitter. But we're going to use Cash App. I already have $20 on Cash App because I had more than that on there till I made some purchases last night and today, but I still have $20 left over of 24. So more than enough to make this stack. So it's just a matter of tapping Bitcoin, tapping buy, entering $20, tapping confirm, and boom, just like that, we purchased another. Well, we only purchased 19,000 sats. We purchased 19,599 sats. And while Bitcoin is technically under 100,000, looks like we purchased at a price of $99,750. So just under 100,000 US. The fact of the matter is most services charge some sort of fee, and Cash App, that's one of their downsides, is their fee is a little higher than other services. So with fees, it was obviously the equivalent of more than $100,000. So we got less than 1 sat per VByte. But nonetheless, those 19,599 sats bring our stack up to 10,312,969 sats. And they do raise our average purchase price by about $127. So our average cost basis is now $35,295.36. Still not too shabby considering Bitcoin is ringing in right around 100,000 US dollars per coin. And perhaps more importantly, as Bitcoin continues to rip, when Bitcoin does hit that $1 million mark one day, maybe this cycle, maybe next cycle, who knows? But when it does eventually, our current stack, without adding a single extra Satoshi, will have a US dollar value of $103,129.69. And at Fidelity's prediction of 1 million Bitcoin by 2038, remember multiple episodes ago, we said that Fidelity's Jurian Timmer, the director of global macro at Fidelity Investments, said that 1 Bitcoin will be worth $1 billion by the year 2038. Who knows if he's right or not, because again, nobody has that crystal ball. But when Bitcoin does hit 1 billion, our current stack would have a value of $129,690 US dollars. $103 million is life-changing money for anyone I know, probably even Michael Saylor as a billionaire. $103 million would at least buy him a new yacht. That's pretty exciting. So again, that gets back to what I was talking about earlier, by pushing your time frame out, by lowering your time preference, by buying and holding. What 2038 is 13 years from now. So if you push that horizon out, 5, almost 6, or I guess 4 or 5 halving cycles from now, as we also talked about when we spoke about our net worth in pizza, if we had 1 Bitcoin, that even though we don't have anywhere near the current miner reward, just by pushing out to 2038, we potentially have $103 million of the Bitcoin. So that's not too shabby, considering we've converted a measly 3,640 US dollars into Satoshis, and that we did so at just 20 US dollars a week. All right, before I wrap this, as usual, I want to ask you to help support this podcast by sharing this episode, by rating and reviewing this episode, and to make sure that you're following us on Twitter, because you need to feed that algorithm monster if you want more plebs to find out about this podcast. Again, if you're not following us on Twitter or X, we are at BTC Bulletin Pod, like Bitcoin Bulletin Podcast. Hopefully next week, I will still be here on the Space Coast of Florida. I had done a heck of a lot of traveling in the last month. I had to actually travel out west more than halfway across the country 3 separate times last week to help out with family and some other issues that came out. But I think, fingers crossed, that's done for now, at least. Either way, I will be doing a DCA Wednesday series, whether I'm here in the studio or at Parts Unknown, one way or another. But all that really matters is that until that time, you just keep on stacking those sats, you sexy sat stackers.